What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. This is the show that we use technical analysis, intermarket analysis to get a good idea as to where the stock market might be headed next. Guess what? The sell signal warning is upon us. Yes, as the price action of the market continues to go sideways. We're going to get into all of that today, and I'm going to be getting back into crypto as well towards the end of this video. I'm going to try to keep it short and compact as possible. Let's get into today's episode. What's up, everybody? Welcome back. Now, before I get started, if you haven't done so already, sponsor this video by hitting the thumbs up. That's a thumb, and it is up like that. That doesn't look like a thumb. Alrighty, we're looking at the S&P 500, and what I want to point out today is we clicked into another all-time high. Yes, but we didn't close there. We didn't have a closing all-time high, but we did reach to an all-time high today, which is never always that bearish, right? Dow Jones Industrial Average did close at an all-time high and reach to even a higher all-time high. What could be wrong? Nothing. Apple hit $3 trillion market cap today, but then sunk off towards the end of the day, down 1.273% as soon as it kind of touched into that 3 trillion territory. What's up with all this price action? Well, yesterday's video, we talked about the yields. The yields continue to go upwards, and the curve has continued to steepen here. And we talked about how that benefits financials and how that puts pressure on tech. If we take a look at the weekly chart, we're starting to see a little bit of a breakout here of this inverse head and shoulders. Is this going to play out a full measured move? That would be insane in my opinion. You know, we'll talk more about that here momentarily, but the week is still not over. It's only Tuesday, and it is making a pretty aggressive move into that 1.7 area of resistance to keep an eye on. So as that continues to move up, what do you see happen to the 11 sectors in the S&P 500? You see energy and financials up there at the top. That was not what I wanted to do. Let me delete that. Energy, financials up at the top, and then towards the bottom you have technology. That rotation kind of taking place right there. Technology was down 1.06%. Healthcare was down there too as well. And then we had kind of a mixed board in the middle. All right, let's continue on here because I want to show you what it kind of looks like when the TNX or the 10-year yield rises. We saw that the other day, but tech really didn't do anything. You can see the Qs right here. Qs really just kind of went sideways the previous trading day, which was right here. Okay, well, sideways down and to up, whereas the 10-year yield was rising, and it didn't really, it didn't affect any of the tech stocks up until today. Now we saw when we got that gap up and kind of sideways action, you saw tech really start to sell off right there, and that's, it typically happens hand in hand. Whereas we talked about the BKX, which is banking, we talked about this little flag pattern, and you can see here as the 10-year yield rises, the banks continue to rise there too as well. It's a correlation to keep an eye on. It doesn't mean that it's going to be every single day that it plays out. There's a lot of factors at play, but clearly here we're seeing something take place here in the yields and the bond markets. If we take a look at the TLT, it is coming down to the lower end of this range right here, put in a nice little hammer candle. So you got to wonder, if this starts moving up, what does that mean? Well, that definitely means that we could potentially see some more scare in the market. We've seen the market roll itself over when we see these big spikes here. And when this spikes up, the 10-year yield typically goes down. So if this does go up, does that mean when the 10-year yield goes down, are tech stocks going to rally? Is growth going to be playing out? Well, it's something to pay attention to, but just be mindful that we are in still a trading range here from the upper to the lower, and we're coming back down. We got below that 200-day moving average, but we're still not below this 141 range right here to 142. So there's still some support beneath us. If this, you're going to get some sort of a bounce here eventually. It's not going to just go straight down like this. At least I wouldn't imagine that it's going to be doing that. I guess anything is possible, but that is something to keep an eye on. Let's go to the sell signal. So this is the total put to call ratio, and when it crosses beneath, from above to beneath 0.80. That's just giving us a warning sign. Sometimes that triggers little sell-offs. We'll see. And we did get a pretty overextended reading here on the put-to-call ratio today, which can signal short-term reversals too as well. I don't know if this is actually fully updated at this particular point in time right now, but I'm pretty certain that this did cross down through that 0.8s. So now we just got to see when it crosses back up from the bottom to the top. That is the quote-unquote sell signal. And if you want to see what happens to the S&P 500 when that takes place, this CPC right here has not fully updated at this particular point in time, but this is why I think that it's going to be crossing down through here. Every red vertical line that you see going through the screen here is when the sell signal was triggered, and this is the S&P 500. So this is dating back to early 2020. We saw that sell-off here. We saw the pandemic crash right here. We saw a little bit of a sell-off right here. We saw a little bit of sell-off right here. Sell-off right here was actually a little bit more of a sell-off, but then it caught its bottom pretty fast. Right here we marked the top. Right here we marked the top too as well, and we're coming back into that range. It doesn't give us an idea of, you know, how powerful it could potentially be. It basically just says, hey, you know, it's not the time to go, you know, gas, you know, down, pedal to the metal, or whatever the saying is at this particular point in time. A couple other things to watch out is the Nyse-McClellan oscillator has a negative divergence as the S&P 500 clicked to an all-time high. The McClellan oscillator down here put in a lower reading, telling us internals are weakening. Another way to look at this is the NIMOD, just a traditional calculation here. And what we're looking at is a little bit closer to that negative divergence. You have a peak to a lower peak. You have a peak to a higher peak right here as the price of the New York Stock Exchange is coming in from an aggressive move, right? You always got to ask, where did price come from? An aggressive move into an area that was previous supply. So, you know, is supply still there, or is supply going to outweigh that demand? And are we going to continue to either one, break out, or are we going to consolidate or potentially start to roll over right now? We will be seeing that here momentarily. Let's take a look at the NIAD. This is advanced decline line. Another thing to call out, we have internals weakening here too as well. We had a higher high in the SPY, higher high in the SP 500, the SPX, and then you had a lower high there in the internals on this specific chart. If you take a look at a couple BP charts, BP SPX chart is moving into that overextended territory right here. We're not fully, you know, super frothy, but we are crossing into that 70 range, currently at 69.98, and that's not really the place that you want to start going long at, right? You want to see this, you know, I like personally going a little bit more heavy long when we start seeing these positive divergences. But when we start to get overextended over here, you know, it could stay overextended for quite some time, but you got to just pair this with the price action and volume on the given charts too as well. If you take a look at the BP INDEU, this is the BP chart for the Dow Jones Industrial Average, also getting pretty fried here too as well on the RSI. Let's continue on. We're looking at the trend on a 60-minute time frame with a 10-period moving average. When it crosses below this red line, gives us a little bit of a heads up saying, hey, you know, we can see some weaker price action. We haven't actually crossed really, we crossed above this green line right here, and that was right around this range, and we sought to see the market move up a little bit more, and then now we're coming down into this red, but we kind of curled up here. So we'll see if we cross beneath it, but you can see here we haven't crossed up or down other than this one time right here, and that was into year end, but we haven't seen that really since October of last year. So we'll continue to monitor that one. Let's continue on to the next indicator, and this one is looking at tips and over treasuries. It's a relative strength line. If you apply a 10-period rate of change, what I have noticed is when it gets up to this 1.3 to 1.5 range, you typically see volatility increase shortly thereafter. You can see the pop there, 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 and now we've hit it twice here. So we're kind of, you know, just hovering around above this range, and volatility, you know, we saw kind of like move up slightly, but then get hit down. We saw today moved up, but then it got kind of crushed down here. So we will see here if this actually acts again like one of these leading indicators, as it does seem to me like the VIX is getting very, very tight right here and compressing to potentially make a sudden move. And when you pair this with the other indicators, you know, it kind of makes sense to see potential a little shakiness here in the very near future. If you take a look at the percent of stocks above the 50-day and the 200-day moving average, The 50-day moving average, we're starting to see a little bit more participation. Yay! That's a good sign. That means some breadth is coming into the market. We're seeing, I saw today, value outperform growth stocks. I'll show you a little bit of that in here momentarily. But then you see here, percent of stocks above the 200-day moving average, part of the S&P 500, still flat. So that is a negative divergence as the market continues to press higher over here on this side. Now, if we talk more about rotation here, you can see here, consumer discretionary, Amazon, Tesla, those are the big dogs. They were down on the day. Microsoft, Apple, Google, Facebook, Nvidia, those were all down. And then you have some that were all in the green here. So you had obviously a lot of participation. So more stocks were moving up than stocks were moving down. It just goes to show you that how important these big names are. So the market, it did click into an all-time high, but it ended up selling off because tech started selling off. And really the only thing holding this thing together was those rising yields helping out the financials. The industrials played a big role, but then also energy there too as well. And you can just see that on this chart, how energy and financials were up here and tech and healthcare were down there towards the bottom. Now, healthcare, that's one of the bigger weights in the small caps, and small caps were up only 0.65%. So if they had the help of healthcare, which is some big names in healthcare, Pfizer, UNH, a couple other ones, obviously. Actually, they're right here. Yeah, J&J, LLY, PFE, ABT, etc. A lot of those names wore down on the day, and that puts pressure, obviously, on not only the S&P 500, but a big portion of the stocks in the Russell 2000 are healthcare stocks. And then I believe it goes, the next important sector there is information technology, if I can remember correctly. And now when those Fang stocks get hit, we like to look at the relative strength of the Fangman stocks. You have Facebook over SPY, Apple over SPY, Nvidia, Google down that list. We went over this yesterday. Okay, still continues to underperform the S&P 500. The only one outperforming the S&P 500 at this particular point in time is Apple. I mean, from a shorter term, like just looking at these moving averages, it's sloping up, and relative strength line is still above it. Okay, Nvidia is starting to crack back down below, but it's really going flat. Apple's actually technically going sideways too. Facebook clearly in a downtrend from a relative perspective. Google's starting to roll itself over here from a relative standpoint there too as well. Microsoft is starting to keel over right here too from a relative perspective. Amazon's continue to trend down, and also Netflix continue to trend down there too as well. So you got to wonder if these big mega cap stocks can't continue to consolidate or hold up or go up, and the financials start losing ground, or energy starts losing ground with them, it could present itself some wicked sell-offs, some crazier price action, some more volatility in the S&P 500. Let's get into crypto here. Crypto, the sell signal, buy signal, the sailor to shift tool, Bitcoin over gold using a 4-week rate of change. Still on a sell signal since early November. Bam, it's still to the downside. Let's look at price action. Still going just sideways as it stands right now. This seems to be a pretty important level right here as the bulls continue to try to hold it up. It's right just above 45,000. So if that gives way, yikes, that could be pretty nasty. So just make sure that you're managing your risk. Obviously, we want to see this thing start to turn up, cross through that zero line. And when that takes place, and then we get a week, a candle that gets above the prior week, that is our buy signal. Let's move on to the price action of Bitcoin. Bitcoin, you can see here from a daily perspective, it is still underperforming the S&P 500 and continues to do so from early November, and it's still below that 50-period EMA, and you can see price action is kind of just drizzling off here. So be careful here. It's below the key moving averages at this point, and you can see here just I have a high, a lower high, a lower high, a lower high. All right, and then you basically have low. And what it tells me is, think of just supply and demand, okay? So supply is getting stronger, supply is getting stronger, supply is getting stronger. Demand's holding up, but demand hasn't made any progress yet. And by seeing progress, you'd want to see a higher high, a higher low, a higher low, and a higher low. So as it stands right now, we do technically have a higher high, higher high, higher low, higher low, higher low. But this is skating on some very thin ice in the short term, meaning if we start cracking down through these levels, now we're starting to put in lower lows and lower highs, which happens to change the shift of trends. So this needs to turn around. It needs to turn around quick. So we'll continue to keep an eye on that. Ethereum, pretty similar situation here. Ethereum is kind of turning up once again here, but still below that 50-period moving average from a relative strength standpoint. And you can see here, every rally has been getting sold off. So you can see, we have a high, lower high, but then we had that sell-off, got bought, rallied, rally was sold into, rallied. Is rally going to get sold into again? I don't know, but you can see here as I'm drawing, expansion, leads to contraction. So you can see it actually getting tighter and tighter there. Contraction leads to expansion. All right, so it's going to be making a move, whether that's to the upside or downside. I couldn't tell you at this particular point in time, but you got to be ready for it when it does make a move. You can see here it's still kind of wedging as it stands here. I'd like to see price action obviously clear this previous high and get back above that 50-day moving average. That would make a lot more sense. As it stands right now, still above that 200-day moving average. Is Bitcoin? No, Bitcoin is below that 200-day moving average. So right now, as it stands, Ethereum is from a technical perspective, a little bit stronger. All right, everybody, that's all I got for you on today's episode. Just to kind of recap, we do have that warning. We have a couple indicators telling us that we're moving into that overextended territory. If you just look at the price action on this chart, look at the S&P 500. It's not going anywhere so far, right? As energy is seeing some big, huge moves to the upside. We're seeing tech kind of take a little bit of a back seat. This seems to be like early rotation taking place in 2022. Give it a read. Do not rush into this kind of stuff. Let the market digest what it wants to do for 2022, and then we got to find some trends and follow those trends. Right now, as it stands, there's just a lot of chop, and it requires a lot of patience, and that's what you need to do. Another thing, if you don't follow me on Twitter, you can follow me there, but I posted out today, I taken out 3 breakout trades so far. So I took in 3 trades, all right? They were all styled in a breakout type trade. And every single one of those, they started off great, up a couple percent. But I'm taking very small positions right now because the market is so choppy. So I'm taking a quarter position, right? I call them QP, quarter position. And all 3 of those trades, they broke out. One, gapped way up today, a couple percentage points, and then it just reversed completely and then stopped me out. So 3 trades in a row, we're all losing trades. But the reason why this is important to pay attention to is, a lot of people think you need to win a lot of trades in order to make money. That's not true. So 3 trades, let me just point this out. I took, because I'm managing my risk, 3 quarter-sized positions, all right? And I lost all 3 of those. How much on my average loss on only a quarter position was 2.5% on a quarter position. Okay, because I'm taking quarter-sized positions, you want to know what my portfolio is down? My portfolio is down 0.04%. Almost nothing. All right, so my plan is to continue to take it slow until I find some momentum and start getting these small trades to work for me. Once I start getting some small trades with minimal risk, as soon as and if they keep getting stopped out, I don't care. I'll keep taking these little cuts until I find a winner. Because if you can weather the storm and stay relatively flat to unhurt while the market is kind of just going sideways, when you do start getting some trades that work out in your favor, it's going to change very quickly. Like, for example, how I'm structuring the trades right now at this particular point in time. If I take 3, 4, 5, 6, more losses from here, it's not going to take me more than 2 or 3 winning trades to make that back. All right, it's just how it's worked. It's how it's structured. So yeah, 0.04% I am down for the year so far in this chop bucket. My plan is when I start winning some of these quarter positions, that'll let me know that the market is shifting its condition into my type of trading strategy. And that is when I'll take those profits and start to scale up to a half-size position. And then from a half-size position, I will start to scale up to a full-size position. And that's where we start making some real money. All right, everybody, that's all I got for you on today's episode. Hope that helps out. See ya later.